You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in. Hey folks, CA Rachana Ranade here, and I welcome you all to a very interesting discussion on technical analysis where we are going to try and understand we are going to try and understand answers to some different questions. Something like, can technical analysis be used for long term or not? How can we determine exit strategies using technical analysis? How can we use different parameters to determine stop loss, or how can we trail stop losses using technical analysis? And to have that discussion, I had invited Mr. Kunal Saraogi, who is one of the famous panelists on Zee Business. He also runs his YouTube channel, which has more than 1 million subscribers. And this, discussion was a part of our Invest in India community, and it was almost a 1 hour discussion, out of which I'm going to present in front of you a 15 to 20 minutes chunk out of that. But if you want to be a part of our community, you can definitely check out the link in the pinned comment and description box below. If you decide to become a community member, these are a host of benefits that you will enjoy after becoming a community member. So, without any further ado, let's get started. We'll kickstart with the questions.
Absolutely.
So, the first question that has been asked is, typically what people do is people associate fundamental analysis with more from a long term perspective.
Right.
And they associate technical analysis with either an intraday or a BTST or a swing trade or something like a short term trading. So, do you also believe in the same thought process that technical analysis is only for short term, or it can also be used for medium to long term as well?
See, first thing is, I completely agree that fundamental analysis works best over the long term. So, if you're using fundamentals, you can't really use fundamentals for shorter term trading or for option trading, or even for like swing trading, or even short term positional trading is not possible using fundamentals because there's no role for fundamentals there. As for technicals, this has been the story of my life actually, because when I started investing, I hit upon this idea of using technicals to invest, which was like a concept unheard of at that time. It's still not very well recognized. People don't really value technicals for investing too much. But that is what I started with. And I've been at it for almost 20 years now, more than 20. And I think it works wonderfully. It's because one of the biggest pain points in fundamental is exits. So you can enter very well, and in fact, people tend to enter much before it starts to show up on our charts. But the trouble is about exits, is because fundamentally the stock becomes fully valued much before the rally actually starts to end. So people tend to miss out on huge profits and gains that they could have got if they had used technical. So technical, I think, works wonderfully for longer term analysis. Now, one way to actually look at it is that if you were to look at charts, for instance, if you look at a daily chart or maybe a 60-minute chart, you would see too much fluctuation. But for the same stock, if you look at the monthly chart or the quarterly chart for that matter, you will see a very simple chart that is unidirectional, that is easy to predict. So it is much like looking at an atlas. So remember, we had those atlases when we were children. Now, of course, all of that is disappeared. But back in school, we had those atlas maps. And if you remember, if you look at the map for the continent, it was so clear, and you could see that going from Delhi to London was a piece of cake. I mean, it was so simple. It was just a straight line that you had to walk and you could get to London. It's because those were, you could compare that to a quarterly or a yearly chart. And intercity charts, intercity maps is what you see on intraday charts. So if you use that analogy, you'd see that those are more complicated and longer term charts are simpler to look at. So one thing is, technicals help you control your emotions. That is what the main idea is, that we think that there is something unique or divine about indicators, that there is some magic put into it. There's absolutely nothing of this sort. Most indicators are overlapping. Their basic concept is pretty much the same. So there are hundreds of indicators. Last I heard was there were 1500 plus indicators. There are more coming about every day. So it's not possible to actually be on top of each one of them or know them or use them. And most indicators have that same logic. So technical analysis is about using statistical ideas to control your own emotions so that you have a definitive level to look at when you're exiting, entering, and so on. So I think it's got a huge role to play. And one thing that validates this is that some of the biggest fundamental investors in the world are now employing either directly or indirectly technical analysts to help them enter and exit. Having said that, there's a limitation to technicals, which is that you cannot use it in stocks where liquidity is not available. So even if you get an exit signal, let's say on a chart, and if your size is too big, let's say you are a mutual fund, and you can see that there's an exit on the charts, but you can't do much about it because you won't be able to get an exit. So from a large investor's perspective, there's a limitation. But for an average investor, a smaller investor, relatively speaking, technical analysis is wonderful for a fund. And if you are a fundamental analyst or you've got a huge leaning towards it and you completely dismiss technical analysis, I think you're making a mistake. Give it a shot, learn about it, and if you still don't find any value, of course, you could continue with what you're doing, but there's no harm in actually trying it.
Absolutely. Wow, fantastically answered. You also mentioned that there are loads and loads of indicators, more than 1,500 indicators. But if you were to name any 2 or 3 indicators which you like to either filter out stocks, or possibility one to filter out stocks, or possibility number two, you might have filtered it based on pure price action, but if you were to have more conviction over that, this is a buy call or whatever, any 2 3 indicators which you
I believe that there are indicators which are, I constantly look for indicators which are bringing something new to the table. For instance, there is an indicator called relative strength, which compares the price to a benchmark.
Mhm.
So it gives you relative performance. So that I think is a very valuable input. There are indicators based on volume. So you must have a volume indicator. Then there must be an indicator which is looking at the breadth of the market. So advanced decline lines, for instance. So that is another area. Then lagging indicators tend to, or moving average based indicators are trend following indicator. So you must have that. So that helps primarily to identify the trend. Then whether or not your stock is in a range is something that you'd get to know if you use an indicator like ADX. So each indicator has got some own its own strong point, but there are hundreds of indicators built around the theme. So one common mistake that people make is that a typical trader screen would have something like a stochastics, then they'd also have an RSI, then they'd also have a CMO or some other indicator that they heard about on the internet or a video that they saw, so they like that indicator, so they placed it. So they've got 10 indicators without realizing that all 10 of them are essentially the same.
Yeah.
So there is absolutely no difference. I mean, in terms of their logic, there are minor differences in how they calculate it, but essentially it's the same thing. So there is a statistical bias called multicollinearity.
Mhm.
So that is what you suffer from if you've got 10 indicators which are pointing at the same thing.
Mm.
So you might think that you've done a lot of work and you've seen it through different indicators, but it's essentially is going to be the same.
Got it.
So that is the problem. So you have to statistically backtest what you're doing,
True.
and you have to understand that whatever you bring to whatever indicator you're employing
Mm.
has to have some positive, some additional input. Otherwise, it's of no meaning.
Fantastic. Uh, so one part is indicator. Second point, I said if you so I mean I mean, you know that I follow Zee Business every morning, at least it's there. My son also knows every one of you. In fact, the other day, Deep was not there on the channel. He got up and he the first question, he was actually half asleep and he said, आज दीप छुट्टी पे है क्या? मैंने कहा ये तो अनिल सर ने भी नहीं पूछा होगा, लेकिन मेरा बेटा पूछा. So that is how, the Z Business channel is definitely there in my house since morning.
कमिटेड दर्शक है हमारा, मतलब इसका मतलब ये
My- So, every single day you come up with some calls on
Right.
television. So whenever you say that XYZ call aaj aap de rahe ho for maybe an intraday or maybe as a swing trade, uh, how does it appear on your radar for the very first time?
See, about TV calls or about short-term calls, that is, see, there are different tools to be used for different time frames. And the general sense is the way that we choose stocks, or I choose stocks, for instance, is that for intraday, I constantly focus on the sector that's actually doing well on that day.
Mm.
So typically, each day would have a sector or a flavor of the day.
Hmm.
So you have to focus on what sector is doing well, what sectoral index is outperforming the index, the larger Nifty for that matter. Then you look for those stocks. And then you look for momentum which can actually pick up the overall structure of the chart. That is because we constantly are looking at charts, so we have a bit of prior understanding that this probably has got a good structure. And if it breaks out in intraday, it might actually take off and actually deliver return. So that is what we are doing. But intraday trading or shorter term swing trading is a function of very different factors. So it has to be seen very differently. So you need a lot of improvisation. It's
Okay.
like Test cricket in 2020.
Yeah.
So in Test cricket, your technique matters. So if you're a long-term investor, that is where your technique is more important. And in 2020, it's about your speed and how quick you are and how quick you are with exits, because things can change very quickly, momentum can suddenly die out, and so on. So it's difficult to actually use those trades, but people do that and they've done that very successfully. So our focus is on finding those limited stocks where we have some bit of conviction that even if people are not able to exit in time, because this is what most people actually end up doing. So they buy something, we give a stop loss level that they must keep in mind, but hardly anybody ever, or a large part of them don't actually follow stop losses.
Hmm.
So they end up holding on to that stock even though the stop loss has been hit.
Hmm.
So keeping that in mind, it is my deliberate attempt to identify stocks that even if people hold on to,
Hmm.
they'd eventually get an exit on. So I also look at a slightly longer term chart,
Hmm.
and I combine those two charts to identify stocks for intraday or for short
Or for a shorter term. But while you were talking about this answer right now, you also said that which sector is in focus. That also needs to be
term.
checked first to identify stocks. Let's keep aside the TV calls or the intraday calls. Uh,
Right.
if I were to play the market for a period of, let us say, 6 months, 1 year, or a shade longer than that, every single time there is a sector which outperforms Nifty or which underperforms Nifty. So they are the ones who actually are the leaders or the laggards, is what I can say, right? So how could one identify the sector leaders or the sectors who could lead the market or who could give an alpha as compared to the market returns? Any technical analysis aspect on
Yeah, of course, there are tools around that. One very fundamental differences or something that people should understand is that see, you cannot predict anything. I'm not in the business of making predictions, so I wouldn't know what sector will do well, let's say a year from now or 2 years from now. So I have absolutely no clue. My job is to identify what is happening right now.
that?
So we live in the present, although we are all constantly looking for profits in the future, but our focus as analysts should be that our approach should be reactive rather than predictive.
Mm.
So I am not a big fan of predictive models and technicals, although there are several. There is a concept called wave theory, which is very predictive in nature, where you're trying to predict what might happen. So this is how things will play out. It will come down, and then 1 year later it will take off, and then this will be the high. So these are predictive kind of ideas.
Mm.
So I have never really believed in those ideas. I think though they are very vague and very difficult to put real money after such predictions. So I am a reactive trader. So my job is to identify what's happening right now. Now, to answer your question, is that how to identify the right sectors? So there is a concept called relative strength that I spoke about. So what it does is it compares the sectoral index to the main benchmark. So if your sectoral index is outperforming the benchmark, that is, let's say the Nifty Defense Index or the Nifty IT Index, for instance, is now outperforming the Nifty. So we know that this is a sector that is outperformed. But you will get to know it only after the outperformance establishes itself on the chart. So there will always be a certain lag involved.
Mm.
So by the time you get to know, I mean, it starts to reflect on your chart, some difference or some movement would already have taken place.
Got it.
So you cannot really preempt anything, but
Uh,
it's still okay. It's because even if you get to know slightly, and that is a big problem with people, is that अरे तो बढ़ गया, अब क्या फायदा है, इतना बढ़ तो गया है.
uh,
बट ये है कि आपको नहीं पता कि कितना क्या चीज बढ़ सकती है. One of the biggest lessons in life is, and especially in a market like this, is that there is absolutely no limit to how much it can go up.
mm.
This is something that you understand only with time.
Mm.
You can understand this intellectually कि हाँ जी बढ़ भी सकता है, कितना भी बढ़ सकता है, but to understand it on a practical real life level requires time. So कोई भी चीज कितना भी बढ़ सकती है. आप देखिए जो shares आज आपके पास हैं, 5 years later you would realize.
Sorry, I'm just getting this in the chat. English, please, ma'am. There are a lot
No,
of
I'm
people from the south.
right. I'm
Even
trying
two,
to.
three sentences here and there. They're like, oh, we are missing out on some knowledge.
No, no, there's nothing to. I'm just saying. With time, you realize that things can go up well beyond your expectation. So one is that, and this is something that you should take a minute and think about. That there are stocks which you were holding, let's say, 2 years ago, and if all you had done was to hold on to those stocks, you probably would have made more money now than you did by all this getting in, getting out, and looking at technicals and charts and all of that. So just look at that, compare that return to what return you've been able to get using all the skills that you've acquired. So you'd realize that you're much better off just holding on. So it's because stocks can go up. Well, there are stocks, including stocks that I once had, and they are now trading at like 10 times of what I sold them at. So this is one of the biggest regrets in the market. So one thing that you realize is that there is no limit to how much it can go up. And once you realize it, you understand that there's so much money to be made by just sitting and holding. But you can't just sit and hold and wait for the stock to go down. If your stock is outperforming, all you have to do is to wait on it. So that patience, if you can develop that, and that is something that you develop over a period of time, then I think there is tremendous money to.
Two follow-up questions. One, you said patience will develop over a period of time. In fact, I've heard that few traders also do some sort of meditation to develop that patience. Is that required, or is it just more and more of practice which will develop more of patience?
What has worked for me, I can tell you, meditation I've tried a couple of times.
Okay.
I read a book called 10% Happier. That is the book I read some time ago. So I got very interested in meditation. I tried my hand, but not been very successful. But one thing that has really helped me, or the thing that works for me, is that I have a huge regret. I don't want to face that situation. That if I exit a stock without there being a real reason for me to exit, and if the stock moves up twice or three times of where I sold, what will I do then? So the guilt of actually having exited at the wrong time is something that will keep haunting me. So that fear, that how will I deal with that, is something that keeps me on with stock. So sometimes I'm really compelled. I mean, you have to. It is a physical force. Your stock has moved up 4 times, let's say, in 8 months. Bought at 100, it's trading at 350, 400. Especially in times like this where stocks move up and they move up very crazily. So sometimes you feel that, okay, to bahut bad gaya hai, isko we must exit. But then you realize that what if it goes up, it doubles from here, or it goes 3 times from here? What am I going to do then? How will I get into the stock ever? And what alternate use of capital do I have? So the capital that I have earmarked for investing, even if I exit this now, I will put it into something else. I won't keep the capital idle in any case. So because that money will again be used, it might as well be where it is right now. It's because that stock is difficult to get in. If I am actually desperate to get out, I'm sure it's so difficult for other people on the outside to get into the stock at these valuations. For instance, if I ask you to, let's say, buy a Mazgaon dock or a Cochin shipyard or something of that sort now, it is so difficult for people to summon the courage to get into those stocks. Wo lagta hai कि it has run up so much, it's gone up too much. So because you can't buy and there is no ease of buying there, by the virtue of only that, the stock might actually go up.
But the point that you are making right now is about the fear of exiting at the wrong time. And I think I have a question around this as well from one of our community members, that the example also that you gave, one was about defense stocks or railway stocks. People are sitting on like 2x, 3x of whatever they had invested at. So there are so many people who are keen to understand how to plan an exit strategy. Because if you are looking from the technical front, there are chances that whatever chart pattern you had identified, the target has been hit. In fact, if you have seen a long-term consolidation breakout, even it has gone 2x, 3x from that. But then the fundamental analyst inside you starts conflicting you that, but Finally, defense is like a long term play. It's what the government is focusing on right now, be it so with the railways as well. So ideally this sector has to see good days even in the coming future. So how to actually manage that conflict in our mind, and how to decide that even though it's a good bet over a longer period of time, say 4 5 years, still this is a good time to exit. Any specific exit strategies that you deploy?
See, a couple of things that I'd like to mention. First is that you must have a very definitive exit plan, is
Mhm.
because exit is a stressful decision.
Mm.
So, whichever way you exit, if you exit when you're making money, you'd always feel that I exited early, so there'll be regret around that. If you are losing money and you're exiting per force, even then it's a stressful decision. So, first thing is exits are difficult. So, you must have a very clear roadmap for exit even before you enter.
Wow.
So you must have an exit strategy at hand. Now, exits can be different. So I won't say that my strategy is the best or somebody else's is worse. Everyone's got their own idea. One other thing that I'd like to mention is that in a market like this, where money is coming without really having to work too hard for it,
Mm.
people tend to think that it's because of their intellect or because of their knowledge or experience or whatever, they're actually making money. But it's all a function of the market. It's just that we are invested,
Correct.
and these are good times for the market, and we are slightly more clued in than an average person is that we are making money.
Mm.
So I think more credit for this returns that we're getting is to the market rather than skills or whatever. This is what I believe. Second thing is about exits. I think there can be multiple ways to exit. One thing that I typically don't do, I have never actually done, I've never had a target for any stock that I bought, is
Oh.
because again I'm not predictive as a trader. So my job is not to predict that this is going to happen and this is where the rally is going to end. So there's this concept of Dow theory which says that whatever trend is on is more likely to continue. So if the stock is going up and it hits a level, let's say 100 rupees, which was your target, what stops it from going to 200? So
Mm.
if Dow theory is to be believed, then it should go to 150 also and to 200 also. So that 150 is a very arbitrary kind of number that we've chosen, is because that is the only, that is our limit. That
Mm.
is the maximum that we can digest, let's say. So we say that, okay, this is the maximum that is going to go.
Mm.
But so for a stock that's going up, there's no target. You should hold on. In fact, the typical conflict that I have over fundamentals is that fundamentals typically tend to give an exit much earlier as
Oh.
opposed to technical. So there are excesses always on both sides. When it's going down, there are excesses. And when it's going up, there are excesses. So fundamentally, a stock might be hugely overpriced, but that rally might continue for a year and a half. And during that period, the most money would have been made.
Mm.
So my sense is that it's always important to use a trailing kind of a stop loss mechanism where you can trail your exit. So there are multiple ways to do that. You can use a simple moving average to exit and you'll be okay. So for instance, on a monthly chart, if you place a 12-month moving average, in most temperature pressures, you will get the exits pretty much close to the top. And there are better ways to exit, of course. So you can, of course, again, like I said, the indicator or the system doesn't really make too much of a difference.
Mm.
It is after the first major green candle when your stock has already run up 40%, your test will be at that point. So if
Correct.
you bought at 100, if it runs up and it goes to 140 in a month,
Mm.
will you actually have the patience to wait for an exit signal, or would you exit without there being a signal? So that's your real test.
Mm.
So for most people, I think they'd exit even if they don't get an exit signal, they won't wait for it. They'll think this is too much. It's gone to 140. Let's book some profits and let's wait for the next trade to come along. The moment you do that, you're off track.
I hope you found a lot of insights from this discussion. And as I mentioned in the beginning of the video, let me repeat this, that you can definitely consider joining our Invest in India community. If you're not sure about the yearly membership, definitely consider at least 1 month membership. If you enjoy, you can definitely shift to a yearly membership. I'll keep on bringing up more and more insightful videos on our channel. I hope you have already subscribed to our channel and also hit the bell icon. I'll see you in the next one. Till then, take care. Jai Hind and bye bye.